morning, everyone, and welcome to the European crossover webinar. And trying to do mic this morning, replace the other one I had. So hopefully we're getting better audio now. Bear with me. A moment. So hopefully, like I said, we're seeing a little bit, getting a little bit better audio with this new mic that I'm trying to basically replace one that I had before. But that being said, let's go in and take a look here on. We are seeing the S&Ps come off quite a bit, and we'll go in and take. We're actually going to go and move into that screen. Actually, going back to using the main computer, and let's make sure. Let's see. There we go. So we can see here that we got the S&Ps coming right into some support. We actually rolled over here. I'm looking at a 30-minute chart here on the S&Ps, and we've come into some support. Remember how important on the way up that 3123 was? Let me move this here. The 3123 was on the way up. Remember we talked about that repeatedly, and obviously we broke higher. We stayed up here going into Friday and into Monday, and then we finally started to break down. We going into the close, we actually came around the 31.33, rallied a little bit up here to Asia, and if you look here on the 30-minute chart, had just a little bit of a gravestone doji here, and then we just kind of rolled off, and we're actually into that key support here at 31.23. Remember, that was key resistance. That was an area that we had talked about on the upside where the market could get to, and you can see here where we had challenged it previously last week. We rolled back down, we challenged it again, and then going into NFP in Friday's action, we actually took off and we kept on going, and finally this is where we're finding some support on the way back down here at 31.23 right here. Obviously you've seen the NASDAQ taking its little bit of a drop also here. We'll go on and move back into, let's go on and take a look where we stand as far as upcoming data. So bear with me. So I've gone and switched back in here using the main computer because I found it's a lot easier to jump around, and I think it's a lot more workable than the other one. Although the other one's good as a backup. But we do have data coming up. We did have Italian industrial output figures that came out just a few moments ago, and they were actually down 0.3%. That was the actual number here. But we do have at the bottom of the hour UK GDP, which is going to be out. That'll be out at the bottom of the hour. Not only for GDP, we're looking at manufacturing output. And wow, the S&Ps continue still to slide back down here. Right here at 31.23, and I mean this is a key area here, but we're going to see if we can go in and hold this area here. We'll move this here. There you go. You see here. So we've really come off quite a bit. I mean, and just in a short amount of time, we've just literally just fallen off the cliff. And look at us right now, just barely hanging on here. I'm not sure what precipitated that. But anyway, that being said, we do have data at the bottom of the hour, UK GDP, along with industrial output, manufacturing output, and construction, all hitting the tape at the bottom of the hour. And then at the top of this next hour, we do have ZEW economic sentiment numbers coming out of Germany, obviously, with it being the ZEW. And then as we come into the States, really nothing. We do have the NFIB Business Optimism Index, a very low tier, but really no data as we roll into the States. So like I said, the big news today, this morning, as far as economic data is going to be UK GDP. at the bottom of the hour, along with industrial and manufacturing output and construction data. And boy, these S&Ps are still remain under quite a bit of pressure here. Let's move this out of the way. Let's go in and move into the FX. Dollar index is just paring back just a bit of a disappointment for those that were bullish as we got the NFP numbers. We talked about that yesterday. Is that we had those great NFP numbers and 266,000, but also for those that were just kind of downplaying it because of the GM strike. Well, we did have upside revisions, so it's a bit of a surprise and a disappointment for bulls that we weren't able to get above 97.89, and hence why we're saying that the market still has the potential to come down to 97.20 and bow. These SPUs are right on their lows at 31.22 and a quarter. My actual low is 31.22, but even though this is support, they are not finding a lift here. Let's go and take a look quickly with the euro dollar, and then we're going to get into some news. Euro dollar, like I said, the fall we saw on Friday, we kind of held our own on Monday, and we're just kind of just holding our own with just the slightest bit of an upside bias here. A moment. I don't know why my squawk is not coming on, but I might have to reset it. That's the reason why. Bear with me, I'll get that. And we are still seeing the cable. Let's go and take a look at this a little bit closer look before we delve into the news. So you can see here, one of the things I like about using this computer, I can center into things a little bit easier. But that being said, we're still maintaining this area right here, bumping up against a 50%. Now, what we're looking for on a very short-term base, not short-term, but which was our intermediate target, is 32.08. But as I explained yesterday, I'm looking for a move up to between 32.42, excuse me, and 32.65. Basically taking this range right here and extended that. And so we're looking for a move up to 32, 44, 42, and along with this level, 32.65. Now, our intermediate target still remains the same, 32.08, but if we gun some stops, I think we'll run into a little bit of a pause around this area here. So with that said, let's go on and move into some news, and then we'll get into the rest of the analysis. Bear with me. And just trying to get this squawk back in place. Yeah, this makes it a lot easier to go in and navigate off of this. So one moment. So the Eurozone government bond yields are mostly steady on Tuesday, refusing to budge from recent ranges before this week's ECB and Federal Reserve meetings. With the next round of U.S. tariffs against Chinese goods scheduled to take effect on December 15th and Britain holding a national election on Thursday, investors appear to be sticking to the safety of the fixed income for now. In the early trade, most 10-year bond yields across the Eurozone were largely flat. Germany's benchmark bond yield was steady at negative 0.3 with a recent high of 0.26. The Fed concludes a two-day meeting on Wednesday with Friday's looming U.S. jobs report expected to give the U.S. Central Bank its, this is odd. I don't know why it says that. That is today's. Oh, okay, they're referencing back. Well, Friday's booming U.S. jobs report expected to give the central bank all it needs to stick to the plan not to cut interest rates further. In the Eurozone, Christine Lagarde holds her first meeting at a news conference as ECB chief on Thursday. Expectations for policy action for the ECB and Fed are subdued, said Commerzbank strategist Rainier Gutmann. Lagarde's communication style will be watched closely, but that's unlikely to lead to any repricing in bond markets. Deutsche Bank economists have just raised their forecast for euro area growth from 0.8 to 0.1 next year, and this is the first upgrade in over a year and is broadly equaling trend growth, Deutsche Bank strategist Jim Reed said in a note. It reflects leading indicators brightening slightly and risk reducing. And let's go ahead. Major risks mark time as investors brace for key risk events. The dollar and yen mostly held the safe haven ground on Tuesday, with investors wary of looming deadline for U.S. tariffs on China, British election, and upcoming Federal Reserve and European Central Bank meetings. Front of mind is whether Washington will go ahead with a fresh round of tariffs on Sunday or whether a deal with China can be reached before then. White House advisor Larry Kudlow said on Friday the 15th deadline is still in place, but Agricultural Secretary Sonny Perdue raised the possibility the tariffs are not imposed. There are risks both ways, said Westpac's Emery Spitzer. The trade's still the flip-floppy factor, but I think markets are still reasonably upbeat about the risk-taking. All these little movements are only smoke and noise and doesn't really tell you what's going on. Cautiously positive would be the overall mood. Soaring inflation in China ahead of lofty expectations and a little effect on the market waiting for trade news. Against the Japanese yen, the greenback found support at last week's deadline declines, staying at 108.62 yen. The dollar dropped slightly against the euro to 10.66. The New Zealand dollar rallied as bears trimmed shorts following a slew of recent upbeat economic data. And the U.S. dollar's recovery after weakness last week has been supported by a surge in hiring in November. That is, investors are almost certain that U.S. Federal Reserve will hold rates steady when their two-day meeting concludes on Wednesday, increasing investors' focus on the outlook and on finding a trade war truce. China said on Monday it hoped to make a trade deal with the U.S. as soon as possible, though gave no details or insight into the progress of those talks. Elsewhere, the ECB is likewise expected to keep interest rates steady while the pound's fate is in the hands of voters at Thursday's British election. Sterling edged higher at 31.50, just below a 7-month high of last week, as polls pointed to a conservative victory decisive enough to secure a parliamentary majority. Growth data at 9:30 GMT, followed by a YouGov poll at 2200 GMT, will offer the latest updates on economics and politics. If the UK bookies prices are reasonable and guide to meet market expectations for Thursday's election, it's hard to see much more upside for the sterling on the outcome, said Adam Cole with RBC. Despite the confidence which the markets predict a conservative victory, there are still several major uncertainties, he added, pointing to unpredictable turnout, polling showing a sizable chunk of undecided voters. And with that, let's go on and take a look at the story here. So even as the pound rallies, traders worry of post-election downside. Options show. So Reuters' expectation of the Conservative Party victory in Thursday's UK election have sent the pound rocketing, but some investors are hedging themselves against a surprise outcome that could deal the currency a mighty blow. Since early November, sterling has rallied 2% against the dollar, hitting a 7-month high of 31.80, while against the euro, it reached a 2.5-year high of 83.94 pence. Opinion polls putting the ruling Conservative parties on course for parliamentary majority, enabling Brexit to go ahead by the end of January, 3.5 years after the referendum on whether Britain should leave the European Union. But options show there's clearly some nervousness running through the market. On Monday, 1 week sterling risk reversals, a measure of sentiment and positioning in option markets, traded at their most bearish since 2017. What that means is that the implied volatility premium for sterling puts over calls for the period straddling the election have risen sharply. It's unusual for the option premium to protect against a currency's setback to rise at the same time as the currency rallies in the spot market, but they have something to do with the opinion polls patchy track record of predicting outcomes of UK elections. While sterling puts were in demand before the 2017 election, the currency spot market gains were nowhere as remarkable as in the euro in the run-up to this vote. The recent moves have taken the premium for 1 week puts over the calls, essentially options giving holders the right to sell or buy the pound respectively from around 0% to more than 3% implied volatility, highs not seen since the 2017 election. Risk reversals are out to 2-month maturities. Also show the cost of protection against the sterling weakness has risen to levels last seen in April. So look at this. Some moves. It shows the investors are buying spot, but also low delta sterling puts just put on the off chance that if we get a surprise, they are protected. In other words, you're seeing people hedge for a downside scenario. Peter Knesla, head of Global FX, said it was no longer cheap to hedge on the downside risk. With 1 week major implied volatility doubling since Friday and implied volatility on sterling puts about 3%, the premium on a 129 strike option has shot up around 1.7%. Some option sellers have jacked up prices because they don't want to be short downside risk strikes going into the election. Some recent sterling gains are down to investors slashing short pound positions from 7.8 billion in August to 2.4 billion this month. But some opinion polls suggest that it's too close to call a parliamentary majority for the Conservatives, which vast numbers of undecided voters, and calls for tactical voting. At Labour government, even one formed with support from smaller parties may send sterling to the low 120s, traders reckon. JP Morgan's forecasting sterling at 134 by year end, but says the story is not over. There's a lot of scenarios, and even a no-deal Brexit is not completely out of the picture. JP strategist Luis Aganis said, and that entailing and maintaining some degree of cautiousness, and we're certainly not going all out on the currency. So with that, we're going to move into the analysis. Well, and these S&Ps are still low. Wow, holy smokes. Well, anyway, let's go on and get into the analysis. So looking for today, it said the euro stayed in a tight range on Monday. Resistance remains at 1103 and support at 1020. Now, as I mentioned, we took that dip on Friday and we just kind of held our own. Now, as I mentioned before, this is huge support here, not only horizontally, and you can see all the touches. We also have a trend line coming up. Just key here. Although right now, like the market is pretty much just in check. And I kind of, like I said, Blake had mentioned on the week ahead video, we probably weren't going to see any real action until we get further into the week. Obviously, some key risk events. So we do have ECB. We also have, obviously, the UK election. That's right there at the top. The Fed, we do have a Fed meeting, but as I mentioned, in light of the strong NFP or jobs numbers, certainly don't expect them to be taking any action. Should be just a steady as she goes. So we're just sitting here rather quiet, and I don't really expect any big moves. But that being said, the real resistance is going to go on and come in. You can see right there at 1103. Need a daily close above that to start to jumpstart this market, and of course a major support at 1020. So that is going to remain the same as it was from yesterday. With that, we're going to move into the cable. So cable managed to go to new highs on Monday, but has formed a small gravestone doji. You can see it right there. A respite is warranted, but immediate target 32.8 remains resistance. Support is 31.01. So we're going to go on and update this to 31.01. Move this out of the way. Now, as I mentioned before, is what I'm looking at as far as, and like I said, with this election, who knows? I mean, we'll do a little bit more work as we get it going to Monday. I mean, not Monday, I mean Thursday. Still kind of surprised how quickly this S&P has come off, and we're not getting much of a bounce here from this 3123-ish area here. We're consolidating, but I would have thought we've got a little bit of a bounce here. So try to look at some of these other markets. But as I mentioned here, we have this big range. We talked about this last week. We had one shot here at the big pivot. Let's pull this back. We've said it out ad nauseum, but you can see here why that's been such a huge pivot for me, and why I've marked that off in maroon is this pivot of 2980. Talked about that, multitude of times. Now, we challenged it on this occasion, 1, next occasion 2, next occasion 3. Finally, we were able to go in and break above that. So what I've done is I took the range right here, see that? And just extended that here. And that suggests a move up here to 3142, and that would confluence with this level right here, 3165. Right here, I think it's actually 3164, but you can see right here. That's now our immediate target. We talked about if we got above 2980, let's down a bit. Got above 2980. We knew we had some resistance here. They'd bump up around 3050. They did, and they pushed even beyond that, and then to even 3150. But we were looking for an intermediate target at 32.8. But I think we could, if we do gun some stops in here, this is where we can take a little bit of a pause. Now, obviously, once we get into the election, all bets are off. I mean, we'll see what the heck happens at that point. But that being said, we've got our support is going to be 3101, and our resistances will remain this intermediate target of 3208. We are bumping up our heads against this 50% retracement, which is off of the lows. Got 2957 to 4376. I think I get this wrong here because it should be, I don't know why that is like that. One moment. There we go. So let's go and move in now to the Aussie. This Aussie is just sick as a dog. I mean, it's just not doing anything. And no change here. I mean, one of the things that we did like 2 Fridays ago was, we had actually had broken below this area here, down to the 69.72, and it looked like we were open for a move lower here. And we come around back on Monday, and the market could surprise itself. We move higher, and we kind of extended that, and they're thinking, okay, well now we, basically we trapped some shorts in here that thought we were going to get a move lower with this close, which was certainly justifiable when we closed on that Friday. And we turn around, and then we kind of just stalled here, and you have this little bit of a hanging man here after a move. So a pullback was within reason, and the market kind of just sat here. But then again, look how far we've already fallen down. So we're thinking, okay, well, maybe we can hold in here and start to try and work a little bit harder. All we're doing is sliding back. Now, that being said, we're still within a tight range, but there's just nothing here with this market at the time for right now. We put in here support of 68.05 with some follow through, followed by 67.90. I would expect that they can push a little bit beyond 68.05, maybe try and push these stops a little bit lower, below 68. Maybe some people that may have bought it and thought, okay, now we've started to turn things around in the Aussie, only to find themselves under some trouble. So we're actually going to go in and put our support at Today is going to be 67.90. And resistance, it's actually going to come in right there, 68. This is called 68.55, and that's where we're at right now. On the short term, it's a little bit bullish because we defended that, so we're going to maintain this bullishness as far as a bias, but it's certainly in question at this point. Let's go and move into now to the Kiwi. So no change in the Kiwi because we're in this tight range, but we did go on and indicate here that we had 5 successive higher closes here. And we've actually come into this resistance level here that we already had marked from before, 68, 53, 54 right here. But we've already had a pretty nice move, especially compared to the dog that the Aussie's been. But we have some resistance coming here at this 50% move and the 65.97. Now look, the Kiwi's already really come back with, you can almost call it with gangbusters, especially compared to its sister, the Aussie. But we are in an area of some valuation as far as, you know, kind of a fighting zone. And the market did close above that, but we're kind of struggling here. And certainly after the move that we had, a respite, if you want to call it that, it certainly would be warranted at this point. Support, you can see coming in right here. We're going to go right there with 65.23. You can see that coming right across, 65.23. We actually had 20, so we'll stay with the 20. We'll keep the 20. And on the upside, well, we have a resistance at 87, this 50%. So we're looking for that potentially as a trigger. It's not that far away from these highs. And if we do get some kind of good news or whatever, we can goose some stops, but that'll be our resistance. Now that actually confluences here with this resistance level here. You see that of 97 here. But we'll keep that in place, which is 87. Obviously bullish mode. Let's go move into the dollar CAD. So the dollar CAD consolidated gains on Monday following Friday's reversal. Resistance is 32.72 with a daily close above 33.09 needed to generate a new upside leg. Support is 32.05. So, you know, we came back and we really turned things around on Friday's jobs data. Remember, not only do we have U.S. jobs data, but we had Canadian jobs data, and that came in surprisingly weak. I mean, we lost jobs, and they're expecting the opposite. So I'm a bit surprised that we didn't even add on more of the gains. But we talked about how it's a bit disappointing when we look on the cash dollar index, how despite those stout gains, you would have expected us to reclaim that 97.89 easily, and we didn't even get to that. So not surprising that we did run into some trouble here at 32.72. You can see that here. So the resistance is still going to remain 32.72, or we're going to put it for 32.72. We had 32.17 for support yesterday. We're actually going to move this down to 32.05. Obviously still bullish right now, but here's that resistance coming in right there, 32.72. Now we're going to need a daily close above 33.09. We get a daily close. That would be what would be needed in order to generate a new upside leg. One moment. There we go. So we get that close above 33.09 right there in order for us to go and take a move up here. That's what we needed. But pull back, we're looking for support coming in at 32.05 right there. You see that coming in right here? Right across 32.05. Up there. Mm-hmm. And with that, let's go and move into the peso. Well, we've lost all those gains, and we've been talking about how this pair just has really been just a disappointment. Even when we rallied up, said I couldn't even find anyone that even was talking about the peso. Bear with me. I don't know. I'm not getting anything out of my squawk. Hang on one moment. Oh, I think maybe also now that I've got the mic hooked up, that may be part of the problem. As I told you, I just started using this new mic, and I think as long as I've got that mic hooked up, I can't hear any audio. Okay. Well, anyway, so getting back to speaking about the peso, you can see how we had really, had come apart here. And we actually made a run back here to the pivot. You can see here at 1923.6, right there. And we actually closed just below that pivot. And we were talking about that because that was our support yesterday. You can see here, 1923.6. Now we did close below that, but we've already come off quite a bit. Look at that. 4 straight solid closes below that. So let me come back in here. I think I figured out why that wasn't getting that audio on that. So it says the dollar peso closed below the 1923.6 pivot, opening the door for a move to 1916. Now 1916 doesn't sound like a whole lot. Remember, 1916 was a bit of almost like a trigger. We'd come up to 18, but almost like a trigger that the market was challenging before. So if we were to get, I'd say, 2 consecutive closes below, and we just barely skated below this 1923.6, then I think we can move it. We can move to that major key area, which is 1908. But for right now, it's going to be 1916 that we're looking for support for today. And the upside, we're looking for 1932. You can see where we're coming up with that right there. So 1932 on the upside. Certainly bearish. With that, let's go and move into the dollar yen. SPOOs are trying to find a little bit of support now at 31.24. Wow, they even dipped down with a 21 handle. Wow, they had really come off quite a bit. Down to 21.50. Now we're 24.25. We'll take a little bit closer look at that. As I said, now that I've moved back into using the main computer, it's a lot more workable. Let's go move into the dollar yen. No changes here with the dollar yen. Just to recap, um, we had talked about the significance of this pivot. 927 goes back, what, 18 months or longer. Um, and we finally got that close above that 2 Fridays ago. And the market kind of stalled there up around 950. And we talked about it, go, if we get a daily close below 927, would open the door for us to move to 851. And certainly we got 851. Then the market kind of moved back a little bit higher. Obviously, one of the bigger disappointments for if those that were bullish was you got that fabulous jobs number, 266,000 with upside revisions, despite what those were saying about, hey, it's all about the GM strikes. That being said, we did get upside revisions, so that kind of kicks that thing to the curb. So, but one of the things that's surprising is you would have thought we would have gone, above 109. We didn't even get above 109. So we've just kind of rotated back. We're just kind of hanging here. Short-term support is going to be 828. And upside resistance is going to be 887. So no changes here. 828, 887, bearish. Let's go move into the cash dollar index. Well, we talked about this when you look at this from an overall bigger perspective, so to speak, or let's say medium-term perspective. We'd come down here and we got below the 97.89. And I said if we got a daily close below 97.79, that would open the door, I'm talking about last week, for a move down to 97.20. Now, we got that strong data on Friday that we were just talking about. The thing was 266,000 upside revisions, and we couldn't even take out 97.89 even on an intraday basis. So that certainly had to have been very disappointing for bulls. So with that said, we're still looking for a move down to 97.20. Unless we get a close above 97.89, we're still open to a move down to 97.20. So that's what we're looking for, a move to 97.20. In the meantime, support is still going to come in at 97.30, so no changes there. And resistance is going to be 97.79. That was the area that we said, hey, if we got a daily close below 97.79, that would allow this market to move to 97.20. And on this bar here, that's when we got that close below 97.79. You see right there? So that will be our resistance. Now, in order for this to be negated, we would need a daily close above 97.89. It would negate that, and then we can try and work a little bit higher. This market still does not become a full-on buy until we get a daily close above 98.65. So still a ways to go. With that, let's go and move into the cross rates. Okay, so we've seen the Kiwi yen make the stab, and I did this analysis over the weekend, and I pointed out to this zone that we've come into, which is 71.45 to 71.77 to 78%. It just happens to coincide with that 78%, but you can see that zone that we're into. You see here, a lot of good volume traded into that zone. So you can see where the market's kind of petered out, and you can see it's not only it's pulled back right here to the 71 even, but also coming right along with this trend line right here. So my thoughts would be they could probably goose the stops a little bit here. So for support here on the Kiwi yen, it's going to remain the same. We're looking for 70.85, okay? Them to goose the stops a bit. And on the upside, we're looking for the 71.45. And the 71.45, once again, that's the bottom part of this zone here. And you can see here today, that's exactly where they've run into trouble, 71.45. So no changes on the Kiwi yen, just taking a bit of a respite as we've already had a, look at this phenomenal advance. Look at that, just up, 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 up and away. We still haven't broken or anything. I mean, we're right here against this trend line. We'd actually have to see 2 consecutive daily closes above 71 cents to open the door for a move potentially that could come down to 70.26. But it'd be 2 consecutive closes below 71 cents. Let's go on and move into the euro yen. Well, we still remain below this this key area that we lost, which was, I think it was 2030, if I remember correctly. Yeah, right there, 2030. Although we held our own yesterday, we didn't break any lower, or didn't break lower. But today we're just kind of holding steady for right now. No big movement. This is going to be the same. No changes here, which is going to be 2030, which was, we lost that key area right here. You can see it right there. You see it right there, 2030. So we lost that level that opened the door. When we lost on the close, opened the door for us to move lower. We haven't. That hasn't matriculated yet, but we're pressing up against this. We can see we put our heads above 2030. No change yet. That's going to remain resistance. Until we take it out, that's just resistance right now. Support is going to be 1971. We talked about how the euro came under that pressure. We'll see whether or not they can hold it. I kind of think we are going to hold overall against most of these euro pairs, but time will tell. We do have the ECB on Thursday also. No one's expecting any real surprises. With that, let's go and move into the euro odd. And with that being said, it did go in, still has a bullish bent overall. So we're still giving, I guess we're still giving it the benefit of the doubt. Let's go and move into the euro odd. So we've seen a little bit of a turnaround here in the euro odd. Look at this. This is interesting. I would have expected us to move lower here, and I'll after this action here, I would expect this to be down here. Let me go on. This is just way too big. I would expect this to move lower, and I'll go into that. Look, we've broken, we actually rallied here, kind of holding our own, we break lower. And then we're thinking, okay, you're going to move, we're going to fall even further. But we get this inverted hammer. So it looks like, okay, let's see if there's some fall through. We get this good, strong day coming back. Now, we don't close above this resistance level, which was key, for us to generate some upside resistance. And then we turn around and get a bearish engulfing candle. Look at this. So now it looks like we're going to move lower. And we're still within this range here yesterday. But look, we're pressing higher. Now the key is going to be right there. If they can close above 64.46. That's going to be the key. And that's actually going to be resistance right now. Even though we're above it, that's going to be resistance. We need a daily close above 62.46. I'm going to put a asterisk above next to it because it's a daily level that we need to get above. Obviously still bearish. So this is something else. We get this, we break lower. Look at this big old range. We get an inverted hammer. We reverse this. Then we get a bearish engulfing. And then we sit in the middle, and now we're extending. The key is going to be, can we get above 62.46 on a daily close? Support we have at 61.42. We're going to move this for right now for 61.62. 61.62. Let's see what happens. That's an odd one. Let's go on and move into the Euro Kiwi. This is not unexpected because look how we've actually, this is completely fallen apart here. I still kept this from when we looked like a freight. We got a fake out to the upside. The market comes in and we stay hanging around this apex of this triangle. You see how that was so key there? And then we finally break lower. There was some support at 71.31. The market tried to make a stab. Once we got that close below, open the door for us to go to the next key level, 69.42. We even went through that. So pretty far extended, 68.06. We find the support here. That level was already in place. So why I like to run these levels across the body touches. And we're seeing a little bit of move here. And that's all with reasonable and is expected. Matter of fact, when you look at the resistance support we have, look at that, 68.06. And we're just going off that level and then a return back to 69.42. You can see that right there. So no changes here. No changes. So that said, let's go and move into the Aussie yen. So we're just brushing up here against support. And I think we talked about this yesterday because we're looking for them. Remember we talked about, we mentioned, hey, look, they're so close. I think they'd want to press some stops below 74 cents, see what they've got there. And they're doing that right now, which is 73.96 right now. But we got our support at 73.75, okay? And you can see where that comes in right there. You see? 73.75 coming right across this touches here. Needs to hold that area. And on the upside, 74.38. So no real changes here. So we'll see how this plays out, but relatively quiet overall. Still, we got to give it the overall benefit of the doubt since we did break higher. We're above this trend line, so it has a bullish bent to it for right now. With that, let's go and move into the guppy. Well, these starting pairs have their own mind right now. And when we open this up a little bit further, you can see here that we've already had a pretty good run here. And the next key resistance is 41.36. Now, we did form a little mini, and I wouldn't even call this a gravestone doji, honestly, because the wick is so low. Look at that wick. I mean, yeah, it finished at the bottom, but that is just think of it this way. The market is just marking time for right now. You see? Now this, you could say that's a gravestone doji, and you can see the market paired back. But this, no. We're just marking time for now until we get past this election. And boy, there are some potential moves in here, depending on how this plays out. Thursday is just going to be a wild one. So upside, you can see that here at 43.36, that resistance. And downside 42.40. No big changes at all. Let's go and move into the starting odd. Now, this is continuing. Probably you'd think, wait a minute, look how quiet the guppy is. But look at the odd, it's moving higher. Now, this was an interesting one here. And let's go on in. This goes up to 94.28. So if you take this range, look at this, from here to here, that 127% extension comes in right there at 92.40. Well, that was also confluence in here with 92.58. And that's not no just small little level. Let's pull this back and back. Look at that. That's a pretty key level right here coming across here. And we're above it, and we're still pushing higher. Now, we do have this 161% of this range. There we go. There we go, right there. So you can see we got above this 92.58. We're pushing beyond. We actually got above it on Monday, and we closed right there, and we're still pushing higher. Now, my thought was I was looking for a move to 94.07. Previously, from I think it was like over a week ago or maybe 2 weeks ago, when it looked like it might even break up, I said, wow, this would potentially move to 94.07. Well, I wasn't even looking at this recent move here, but that would go on and also confluence with 94.28 to 161%. So certainly an area to go and look at. Wow. I mean, where we're at now, the only thing I can go on and point out to for right now for immediate resistance would be just say 93.50. But this thing has just got a life of its own almost. So we're going to go with 93.50. But it looks like this thing wants to resolve itself for 94 cents. 94.07 was the level I was looking for this market to get to. If we got above it was actually this level. Let me go back. Right here, 90.58. And I said a daily close above 90.58 would project this move to 94.07. And it certainly looks like we're on our way there. And that's going to confluence with the 161% of this range here. So a nice confluence there. But like I said, with the election, all bets are off. Support now would have to be the 92.58. There we go. Save this. Now, let's go and take a look at some of the other pairs or other markets. So we are seeing the S&P's pull back, and I'm jumping onto this one because it's a little bit easier to kind of look at things in general. Let me move to the other chart. And look at these S&Ps. Holy smokes, can you believe this? Look at this, how this market has really come back. And this is a bit surprising because remember on the way back, we talked about the significance of 31.23. Look at this. We are still pressing even lower. Boy, and you don't want to be caught, catching a falling knife. Honestly, I almost took a stab at it when it was falling down here. I'm thinking because it looked like we had some support here at 31.26-ish. Yeah, you see that right there? And look at that. We just, man, the bottom's come off. I'm a bit surprised that we even got to, when we got with the 24 handle, thought, okay, now we're going to get a bounce. We got a little bit of a bounce, but look, we even dropped down to 21.25, and we did see a quick bounce up here to about 24.75, and here we are pressing again. But that 23 was key on the way up. You remember that? We talked about 23, the significance of 23, maybe a stretch to 28. On Friday, we got this market moving, bowing, and going on the upside. And we kind of hung around there on Monday, and now we've kind of rotated back lower here. Let's go and take a look here on the gold market, on Feb Gold, the futures. I've been looking at the cash, well, the XAU. So because I've been using the other computer, um, but looking here on the Fed futures, I'm gonna have to do a little bit of work on here because it hasn't been anything I've focused on. That's why I referenced the other chart. We were talking about, I think it's for 1454 is key on the spot, but we're looking at the futures here. So you can see here, let's take a look. So on the Fed futures, this is a huge level, which is going to be right at like what looks like 1458. But we're holding our own overall. When you think about where S&Ps are now, we've gotten a little bit of a bounce on the sell-off, but not much you can hang your hat on considering how we've fallen apart here in the S&Ps, and they're still pressing up here, pressing down here, I should say. And bonds, we have gotten a little bit of a rally here in the bond market. We'll go and take a look at this. Move this over here quickly. So we have gone and seen this bond market react. And I always look at the 30-year bonds. I don't look at the 10-year note. No, that's a favorite, but I like the way that the bonds trade. We have seen a bounce off of this this pullback in SPOOs. We had actually pulled back, and we actually were pretty oversold. You can see here. Finally got a bounce back. And look, we've actually pressed back up here in this 58. Certainly nothing compared to the highs that we had seen previously when we're up here. We think we washed a lot of people out. So we're kind of coming back on here. Let's get rid of this. But we have seen a little bit of a reaction here in regards to where we are standing here with the SPOOs. Let's move this out of the way. So that's all we have for today right now. Obviously, we're taking a look at crude oil, and we'll probably start to focus a little bit more on that. We did make this move up to 59.80. Now I'm going to start using this other system. We'll probably start to spend a little bit more time on some of these other markets. But we shall see how the week develops. But this is very interesting. But once again, we're holding here at this 31.23. Huge level on the way up. Now it's becoming some support here, but a bit surprised how much we've gone and fallen back. That being said, thanks for joining us here on the European crossover. We'll see you in the chat room and also for the FX Daily Roundup.